All right, so should you be buying now or waiting for much lower? In today's show, we're going to assess, is the worst over for the Bitcoin sell-off, and could we be expecting a higher low to form right now? We're also going to have a look at some of the altcoin sector and see if there's any trade opportunities. Stay tuned until the very end of the show because we have a lot to discuss. There's a whole lot of opportunity in the markets, especially when there is this volatility. Smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed, and make sure you are ready and awake. So let's get into it. Starting off over here with the banter bubbles, you can see on the daily a little bit of a bounce attempt coming from the majority of the coins over here. You are trying to put in a bit of a bounce there. Weeklies are still looking good, right? Everything's still holding up over here, and I do think that we may soon start to see altcoins rally aggressively, especially if Bitcoin does confirm the next high low. I'm going to show you why in today's show. I think that everything that we've been lining up for the last couple of weeks to months is starting to come into fruition. And I think now more than ever is time to pay attention. And if you had doubt whether this was still a bull market, stay tuned until the end because we have a lot to look at today. And I'll show you what's happening in the price cycles, especially around that Thanksgiving time period, right? Which is coming up now in the US, of course, tomorrow. And I'll show you what happens from Thanksgiving leading into Christmas Day as well, and what we've seen every single other time. So one of the elephants in the room, of course, has been the MicroStrategy chart, which has kind of led this move towards the downside. And interestingly enough, we did speak about that as one potential warning signal that if you do get that sell-off over here, it may be a leading indicator as to what comes next for Bitcoin and crypto, right? And we got that move towards the downside, but what now? What next, right? Well, currently as it stands, theoretically on the daily time frame, this is still holding up over here for MicroStrategy, so long as we keep closing daily candles above that all-important $327, right? This rallied obviously all the way up to 542, trading like a highly leveraged altcoin. It's unbelievable, coming back down towards that 50% level. I wouldn't rule out the possibility that you could actually theoretically sweep below that level, but the most important thing to note over here is you immediately want to see MicroStrategy closing back up above that orange line over here, which is coming in at the 50% level, measured from the low to the high. That is going to be your key zone where you want to see support. So the next couple of days are going to be very, very important, because if it is to fail that level, well, we'd expect that that should fail it now very, very soon. If it is to hold that level, well, then we expect that this should start to find support and bounce out of here also very, very, very soon. So a very important chart to be looking at. The one thing that can also give you a little bit of forward guidance as to where the market is always look towards the stock market, because the stock market typically leads the crypto market. We saw the stock market bottom before crypto did. We also saw the stock market make new all-time highs before crypto did. And what are you seeing the stock markets do right now? Well, they're powerful, they're strong, they're moving onwards and towards the upside over here. The S&P 500 hanging around that $6,000 mark, pretty much consolidating at those all-time highs. And this is a bull market, right? Something very important that you can have a look at as well is yesterday, I don't have it factored into the show, but I know what happened yesterday. You had Trump talking about tariff increases, right, for various different sectors. Of course, trying to control things in terms of negotiating, right? He always comes in super high, 25% tariffs, massive, massive tariffs, with something to do with, of course, illegal immigrants, and other countries need to tighten up their borders. And consequently, the stock markets dropped ever so slightly based off of that news, right? So if you went onto a super low time frame chart, which we can zoom in on over here, let's just highlight into that area where that happened. What you can see over here, let's grab that over there. Let's go a little bit bigger. There you go. So into that announcement, as Donald Trump said that, you saw the stock market pretty much dip off of that news. And then immediately the stock market started to reclaim, right? So you got the sell-off and then the immediate reclaim. This is a strong sign, right? This shows you that it's a bull market, because when you receive shocking news or bad news in a bull market, you typically do get that initial knee-jerk reaction. Prices sell off, but very quickly prices get reclaimed back towards the upside, and everything is business as usual. And this is also a useful sign that you guys can utilize when looking for the market cycle top. When everything is super exuberant, everyone believes prices are going to go higher, and then you receive really good news near the cycle peaks or near where things are frothy at the top, but price comes down off of that good news. Well, that's a signal that there's a shift in the momentum, a change of character happening within the market, and consequently, you're looking for things to go in the other direction. So puzzling all the various different pieces together to build this puzzle that we have, being the markets, and trying to identify where things are and where things are going. This is one valuable thing that you can utilize. Bad news, sent price down, prices immediately reclaimed, and right now you have the S&P 500 just about to break to new all-time highs once again. Dow Jones already at all-time highs, and Nasdaq hanging slightly below all-time highs, probably about to push back up. So these are all good signs. It tells you, simply put, that it's a strong bull market, and therefore you should expect that crypto will trade similarly to what the stock market is doing, which means that dips are for buying. Now the question is, right, buy now or wait for lower? That is the question. We'll try and identify that in today's show. What we can look at is what happened out of the 13 different Thanksgivings. We've seen 8, this one being the 9th one, where price actually sold off, right? So if you look at the halving cycle, this is the halving cycle on the orange line. We know you get those parabolic advancements. And a shout out as well to Aaron O for creating this tweet over here, really good tweet over there, analyzing the turkey, right? The turkey being for Thanksgiving. Just before Thanksgiving 2012, you get the dip leading into Christmas. Price is trading back at all-time highs, and just after Christmas time, you go full-on parabolic, right? If you go to 2016, right around that Thanksgiving period, you get the sell-off, right? You get the sell-off just before Thanksgiving, a small dip on Thanksgiving, rallies up into Christmas, small dip, and soon after that, parabolic advancement in 2016, right? If you look at 2020, well, you had the slight scare over here with those candles on a weekly scale. Just to give an idea, right? These are weekly candles. This is probably looking most similar to what we've had within this cycle, a little bit of an up candle, a little bit of a down candle, pause, rallies into Christmas, another dip, and then finishes off with a blow off top. So the question is, will this time be any different, or will it be exactly the same? So from Thanksgiving to Christmas in 2012, 2016, and 2021, we saw 26%, then a 33%, and then a 99% gain with 100% hit rate, that between Thanksgiving and Christmas, you saw new highs, right? Which simply put means it buy the dip opportunity is probably lining up right now. And if prices do go any lower, it's probably an opportunity to get allocated into the market. The other thing that I wanted to revisit, which we've used throughout this cycle, is, of course, the hash ribbons buy indicator by Capriol Investments, which continues to show a buy. We don't have a capitulation signal again. It's still showing long and strong. But the more important thing that I wanted to highlight is the relationship between the 200 EMA and the 200 MA, right? So when the 200 EMA, which is going to be the purple one, crosses above the 200 MA, we've typically seen pretty big moves, right? So initially you can get small dips along the way, but if we highlight this and we have a look at what previously happened, most specifically when those MAs and EMAs are angled towards the upside, this is what it looks like, right? When you get that cross between the 50 and the 200, you tend to get a parabolic advancement, right? Parabolic advancement will hold you in for the entire cycle until such time as you cross below and you lead into the bear market over there. This one did cross up, but it wasn't angled towards the upside, so I left that one out. These ones over here, you can see the 200 crosses, or the 200 EMA crosses above the 200 MA, and most specifically, they're angled towards the upside and hold you in for the entirety of that move until you pretty much get into the bear market. And within this particular cycle, well, we've actually had 3 crosses, right? So we had this one over here. Okay, this one shouldn't be in here. Let's just cross that out. So this is only 2 crosses over here. We've had the purple one over here where price gets back above. There you go, leads into that big move towards the upside. And now we're starting to see the same thing. So could it be that we actually just playing things out just like we have before, where typically you lead into those parabolic advancements? Well, if you look at this will also give you an indication of how the other cycles have played out. And I find it incredibly interesting. What this has done is it essentially takes a fractal from each of the prior cycles over here, and then it overlays them to showcase how price should be moving over the 4-year cycle. And it looks like this, right? So if we just mute that over there, it grabs that fractal over there. You'll see it now. Let's just do that again. Let's run it again. There we go. So here you go. You're having a look at the prior cycles. Essentially, there we go. It takes those, puts it into a logarithmic chart. You copy and paste that. You copy and paste that fractal. You copy and paste the 3rd cycle fractal. And then you overlay that on your chart. And simply put, what this is showing is a cycle top should be expected 12 months from now. And if it plays out like the prior cycles, you can see on average, you'd be looking at a price target of anywhere between $150 and up to potentially $200,000. So there it is. And then you lead into the bear market, which would of course be about 2017, somewhere around there would be the cycle low. So looking really good over there. Everything is still following according to the plan. There has not really been any deviations, no reason to believe that we should be shaken out of the market yet. And you can see the BTC open interest on the futures chart has also recently started to spike. We're seeing the same thing over here if we look at Ethereum, an even bigger spike up on Ethereum most recently because ETH looks set to move, right? So these have been part of the analyses that we've been doing over the last couple of weeks and the potential for that transition from Bitcoin into Ethereum. We still have the support of the exchange volume. This is one of the most important tools and indicators that we could look at because it truly shows, is new money coming into the market? And the answer is yes, right? New money is still coming into the market over there. We have the USDT dominance dropping once again. Now, I'd love to see this pretty much have been a fake out, shaking players out of their long positions. Remember, if the USDT dominance goes up, it means the rest of the market goes down. So hopefully this was a shakeout and we do start to break down in a big way over here and continue this journey towards, of course, the 3.5% level on the USDT dominance. As long as it does come down, we should expect that Bitcoin probably has put in its macro high low, and we're going to continue onwards and upwards. If this does find support and it starts to climb once again, the next major level to look at is going to be this resistance level coming in at 4.5, right? 4.5%. And if you do get to that level, that opens up the possibility hitting this zone over here probably sends Bitcoin down to about $85,000. So you do need to be aware of the downside risk. There is downside risk in the short term. Remember, this Bitcoin dip that we've had has been pretty minuscule in comparison to what we've seen in some of the other cycles. In some of the other cycles, Bitcoin can drop up to 40-50% and still remain within a bull market, right? And we haven't even seen close to that yet. So you need to ask yourself that question: can your portfolio withstand that kind of a drop? Can your portfolio withstand a Bitcoin drop from high to low of about 20-30%, which has been the average of this particular cycle? And if the answer is no, it means that you overexposed or over-leveraged. For the most part, most of you that are saying, no, you can't withstand that, are probably over-leveraged. I really encourage you guys, stay away from leverage as much as possible within this particular part of the cycle, because it is going to be high risk, right? If you're trading on leverage when the volatility is really high, you're going to get absolutely rinsed, right? So in support over here of what we're seeing with the increase in the open interest on the futures charts over here, we can also see the same thing happening with the aggregate funding rate, which yesterday was down quite a lot. Now it's recently started to spike up, which shows that new players are opening up positions once again. We got a pretty healthy reset over there on the Fear and Greed Index, which was trading in the 90s just a couple of days ago, now down to 75, right? So a very, very healthy reset on the Fear and Greed has also reset the majority of the cryptos RSIs, right? So if you look at all the different RSIs over here on the 4-hour time frame, pretty much everything was trading in that superheated zone, which is where you technically see your strong trending moves. But the flush down back into neutral presents another opportunity to get into some of those positions, right? And then looking at this one, I think this is a very important chart to look at as well. If we zoom in and we have a look at the weekly time frame, you can see how heated things were around the 23rd of November, just about a week ago, and now that's been flushed. Now, it's common that just before you get those parabolic advancements, which we've recently just covered, you will get a couple of these flashes, right? Look at what happened in December before leading into the price move in August. Now, I'm going to flash it on and off the screen just so you can see it. That is your BTC price chart, right? The BTC price chart with the white line overlaid with the funding rate heat map across all the various different cryptos. And what we noticed over here is similar to what we saw back in December last year. You go heated, you go hot, you go cold, you go hot, you go cold, back and forth, back and forth. It creates that choppy environment, confusing people as to what comes next for the next phase of the move. Basically a choppy environment, chopping you in and out of your positions. And then whilst it goes completely flat and everyone's given up on their positions, that's where the move takes place, right? And then unfortunately for most people, they jump back into the market when this is very overheated, when in actual fact, the majority of the move happens in such a short amount of time that you're probably better positioned if you just stuck with the overall trend, which has been towards the upside, and you continue to hold your positions as opposed to getting too cute and jumping in and out of positions the whole time. Consequently, you get back in when you get confirmation of the move, at which point it's too late, right? You're already back in heated territory and you're taking on a massive amount of risk, right? So please do be careful of that. Right, the TD sequential 9 top is still in play. That essentially simply means that this entire week remains a high risk week, right? We need to wait for the rest of this week to close to get more information. This whole week remains a high risk week. We have to talk about pullback levels. In a worst case scenario, I'd be looking down to about $74,553. That is pretty close to where your range breakout level was. And I think this would be, uncharacteristic of the market to move back to that level, for the simple reason that you've left an 8-month trading range. Leaving an 8-month trading range leads to big breakouts, right? And it's very, very rare and uncommon that price will revisit all the way back to those levels. Of course, crazier things have happened before, and even if you do, this was essentially your last higher low, and therefore you would just be setting in yet another high low, even if you do hit that level, right? So keep in mind, this is your broader perspective or your overview of what's happening next. Even if you do get that deep, dark, terrible sell-off down towards that $76,000, $75,000 level, it's still a buy the dip opportunity because the trend is your friend till the end. It's still high highs and high lows. Remember, this is essentially then going to be your next high, and you're looking to buy the next high low, whether that's here or here, right? So those are your pullback levels. Nothing changes over there, and it's not going to. Yes, you have a CME futures gap that's currently sitting over there, and I'm sure a lot of the bears will be targeting that level right now. But I do want to remind you as well that the CME gaps don't have a 100% hit rate. They fill a high probability of the time eventually, but you can go on for an entire crypto cycle before revisiting the CME gap. So don't hold your breath on those types of things if you are trying to get allocated into the market, right? Okay, quickly on the daily time frame over here, there are some things that we have to look at specifically for Bitcoin. These are the same levels, right, as outlined before. It's your 0.382 and your 0.5 level, price moving up. Now, you could put in that high low in the next 2 weeks or so, because remember, you do have your moon phases, right? Bull moon, bear moon. So bear moon is coming up very, very soon. We're currently 13 days through this move, or 12 days through this move. That should put it somewhere around Saturday. By Saturday, you start to print the next bear moon. Now, we have to take these things with a pinch of salt, as I've always told you guys before. Use it in conjunction with the rest of the indicators and things that we're looking at. And for now, the trend is still very much towards the upside, and therefore you favor the trend, right? So key levels, we looked at this yesterday, that $91,119 to be hit. We have hit that level. Now you need to watch if you do set in a lower high and you start to fade price action, anywhere around this 96K level, then you're probably going to break the 91, and you could then come down to that 85, which is actually where I believe the majority of buyers will step in, right? I don't think that, even though if we look at this chart over here, we got the CME gap at 77 to 80K. I think most buyers are going to step in at that 85K level should we get there, right? So in terms of a price drawdown, how much lower would this be if you are looking at that? Well, to 85K is about another 8% drawdown. So again, ask yourself, can you survive that type of move? In the short term, which is your 4-hour time frame, I'm really just viewing this as a range-bound market, and this is pretty normal following a huge move. We've seen it every single other time before. I'll give you some examples over here. So if we study the 4-hour time frame, when we started to go parabolic from this point up, right, we then led into an 8-month trading range, and you started to form a range-bound environment with range high, range mid-range, and range low over there. So if we look at the current price action, again, I think it would be kind of uncharacteristic following such a long range to only break out and go this high and now range for another couple of months. But nevertheless, levels are levels, and these are the levels, right? If you're focusing on those range levels, you're going to have your range high coming up just below $100,000. I've set that at 99,467. It's all written in white on the right-hand side. You have your mid-range over here where you capped that high. You came back down, reclaimed, went parabolic, came back, found support. That's going to be labeled as the mid-range, and that's at 92,386. And then we have the range low, which I like has confluence with the 200 EMA on that 4-hour time frame. And when I trade bull markets, I typically use this 200 EMA as a strong buy the dip zone. So if price does happen to reject, come back down, hit the range low, and find support at the 200 EMA, which is the blue line, that becomes a strong buy the dip zone for me personally. And again, that's 85K, right? So lining up with all those things we've looked at, this 85K is going to be wrought with plenty of bids within the market. This is a big area that a lot of people are going to be buying into. And you should expect that at the very least, even if this were to fail, at the very, very least, you are going to get a bounce, which will probably then fail once again. If it does go lower, right, it means it would probably fail at this $92,000 level. And then at that point, you do go lower, right? So we'll keep an eye out on that. Very, very important. And then also, guys, if you are looking at volatility, if you are looking at indicators, and we have someone that we're going to bring on in just a moment, by the way. We have a guest. Very rare that we have a guest on the show, but we're going to bring them on soon. But if you are looking at confluent levels, and this is a mid-range level that should bounce price, and you like indicators, well, one thing that you can also look at over here is the 𝗕𝗓𝗓𝗓 indicator, which is currently signaling a long trade from the pivot levels over here on Bitcoin. That's $93,351. Looking for the long entry. I see they have their stop over here at 92,000. There is Black Friday specials across the board. If you are interested in that, there's going to be a link in the description below that will take you through to that page. So if you want to trade these things, remember, you can trade it also on Blowfin. You have a couple of days left. Competition ends in 15 days. This is to win the $1 million prize pool. But I think the most important thing to mention over here when it comes to Blowfin is that they have fire blocks, which means that your funds are safe, right? Your funds are totally safe there. And the most important thing is you're getting the 10% cash back, which means you have a reduction in your trading fees and it's 10% straight back in your own pocket, right? So use the link in the description below if you do want to participate in that. If you want to join into that, Blowfin is over there. Click on that. It's one of my preferred exchanges to trade on, right? So let's have a look at the altcoins, and then we're going to bring the guest on very, very soon in about 5 or 10 minutes. Looking at the others chart over here, you can see we're still holding that key level, right? We've broken the neckline. You're holding that as support. And therefore, this is telling you, don't be too fearful yet, right? Don't be too fearful. This is telling you there could be that rotation from Bitcoin into the altcoin sector because others refers to the altcoin sector. And if we look at others BTC again, it's reattempting at that break of structure. So it hasn't given you the full go ahead that it's bullish yet, but it's super close. It's very, very, very close. And I can only suspect if the USDT dominance continues to reject and break down, we'll very soon see this spike through this level over here, breaking the structure, create your first higher high. Then you can look to allocate into the next high low. The only thing is you should probably have a plan and start to already position yourself into some of the coins in terms of the altcoin sector, just in case this is rapid, right? Sometimes you see these really explosive moves over here, and that's going to mean that you're going to have to wait probably a couple of months before you fill some of those inefficiencies. So there's such a thing as opportunity cost as well when it comes to these markets. Let's quickly look at the total cryptocurrency market cap, which ultimately shows us it is the number going up, right? Overall, is there new money coming into the market in conjunction with this over here? And the answer to that would be yes, right? For now, this is still bullish, right? We haven't taken out last week's low. If we started to take out last week's low, you know, that would be a little bit of a warning signal. But for now, if this candle starts to close green, which we still have 4 days left of the week, that's going to be incredibly bullish. Yes, you're at your 1.618 fib extension, which is resistance, but ultimately over time, you would expect this should trade at least up to the 3.618, which is 5.42 trillion. So I think I can summarize everything like this, right? If you established your positions much lower and you got into the market with us near the bottom, right? If you got into the market over here, of course, continue to hold your positions. If you even got into the market somewhere around here, which would have been earlier on this year, January, still remain in the market, right? I would even say if you bought Bitcoin when it was down at $49,000 with that scare over there, remain in the market. But if you're somebody that's brand new coming to the market today and you're only looking to enter now for the first time, for you, maybe you need to look towards the altcoin sector with things that are as close to their invalidations as possible, or you need to remain sidelined waiting for a proper pullback or confirmation of a high low, right? For you, it's going to be a little bit risky to start to enter into things like Bitcoin right now at this point. You might have to adopt a mentality where you're looking for lower time frame trades, right? Leverage trades, or maybe you just need to trade, short-term trading accounts and forget about these swing trade positions. Okay. So looking at Bitcoin dominance, what I'm really waiting for over here is not just this weekly candles confirmation of what it looks like, but specifically next week. We're waiting for 3 candle closes. If we get 3 weekly red candles over here, that's going to be incredibly telling. I actually want to look at the 3-day time frame. So you've already got 1, 2, and this is now the 3rd 3-day candle that's about to close. If this one starts to close red, you're starting to really increase the probabilities. We've already got 1, 2, 3 red days in a row over there. We also had 1, 2, 3 red days in a row over there. The weekly is really going to be the telling sign for me. If next week's candle is red over here, I would expect that this is definitely going to lead into a breakdown. And I think you'll accelerate to about 53% of the Bitcoin dominance, which should lead to a huge move. So there is a cheat sheet over here for those of you in Whale Room on the Bitcoin dominance and how to trade that. Remember, generally speaking, if Bitcoin dominance goes down and USDT dominance goes down, that is where the altcoin sector is going to fly. And this is our expectation of the trade setup on ETH BTC, right? I have yet to pull the trigger. I came so close last night to pulling the trigger of moving out of Bitcoin into Ethereum. I told you I've already moved my BTC to the exchange in anticipation and preparation of that. I guess the one thing that's holding me back right now is the potential pullback that we could see over the next 2 weeks. One more pullback, and I think that maybe I'll get this ratio just a little bit lower. At the end of the day, this would be knife catching because we have no confirmation, right? We have nothing really to work with over here other than the fact that timing wise, we said we expect this to create a bottom on the ETH BTC chart before January hits. And the real confirmation comes when you break structure, right? You need to break above this yellow line over here, which we are yet to do. So the question is, of course, when alt season, right? This is the path to alt season. We know Bitcoin tends to outperform everything first. There's always, not just this cycle, guys, but every cycle, there will be exceptions where you get the likes of Solana, which actually outperform Bitcoin for the entirety of the cycle. But we look to the rest of the blue chip large caps like Ethereum, right? And we need to see that overlap phase start to take place where Ethereum starts to outperform, and we could just be at the very, very start. What I want to remind you of as well is that when it comes to Bitcoin season, and you have a look specifically at the Bitcoin cycle. So let's go back to Bitcoin here just very, very quickly. And we have a look at this Bitcoin cycle and we focus on the timing, right? Essentially, the Bitcoin bull run started over there when the FTX collapse happened and the market bottomed. That meant that you went up. The bull run's been on actually for 107 weeks, right? So give or take, it's been 2 years of a bull run. The bull runs typically last 3 years, and then the bear market goes from top to bottom. It takes about a year before you hit that low, right? So if you look over there from top to bottom, how long did that take? Exactly 1 year. It was 52 days, right? So 3 years up, Bitcoin leads that first bit, the 2 years, it leads it. And then phase 2, 3, and 4 all happen in a 12-month period. It's aggressive, it's powerful, it flies, it's very, very, very quick. So my recommendation to you is get prepared. If you're somebody that's new to the market and you're looking to jack up your knowledge, you're looking to accelerate your learning curve into the market, then there's no better place to do it than right here today with our brother from another mother, the Lord of Entry. What's up, bro? How are you?
Hello, you legend. I'm enjoying the show here. I'm enjoying your views on ETH, BTC, things like that. What's going on?
Yeah, I think it's super close to bottoming. I'm so tempted to just move the BTC in, but if you look at my portfolio, I'm actually already 80% not Bitcoin, meaning exposed to the altcoin sector anyway. So I think that's kind of the reason that I'm not deploying the last 20% of BTC yet. I think it would be wiser for me to just leave that as a little bit of a hedge and wait for that final confirmation. But I think that, if I were 100% BTC up until this point in the market, I'd probably start to make that switch round about now. But yeah, I don't know. What are your thoughts on the market?
Yeah, I've actually just started. About a week ago, I took profits on my big BTC long, and I've got my first toe dipped into ETH BTC. We saw it hit that trend, that macro trend. So there was a little bit of a reaction there. Yes. I am expecting a little bit lower. So if we do go lower, I'm just going to start adding to that ETH position. But for me, it was like risk reward on BTC versus moving into more aggressively some of the alts. It just felt like time after that big BTC pump. So yeah. So I've dipped my toes into ETH and obviously focusing on the ecosystem now a lot. We're looking at Matic, Arbitrum, Lido, a lot of ETH plays, 𝗕𝗢𝗕𝗙, those types of things as well. So yeah, just trying to put my attention onto that at the moment.
Yeah. Look, I feel the same, especially with Pepe. I actually dropped in Whale Room yesterday. There's the charts of Pepe USDT, Pepe BTC, and Pepe ETH, obviously as one of the best leverage bets that you could take against ETH. So instead of obviously opening up an actual futures trade on ETH where you pay fees and risk liquidation, that's kind of my play. Is like I might just wait for that ETH BTC chart to break structure, confirm the higher high, and on that next high low, that's probably where I transition maybe the BTC into things like Pepe or any of those higher beta plays. But yeah, let me ask you something. So we know that it's a very exciting time for you. We do, of course, have from zero to printing profits in 10 days.
Let's go.
And it's the Trading Accelerator course. Well, what can you tell us about this? This is amazing.
Yeah, thanks, man. So basically, look, people know me. I'm a bit of a degen. I'm a bit of a leverage trader. I love working on hot zones and things like that. So I'm more like a reversal trader, whether it's to the upside or the downside. I kind of look for these hot zones where we get spikes. And obviously, I'm leverage based. So a lot of the stuff is catered for degens. But what I've got is a beautiful spin using indicators as well for confluence on a lot of the TA that you guys see on my show. And then on top of that, we've got the guys automating and setting up bots. So we've got a couple of tricks up our sleeve here with the bots that can trade for you while you're sleeping, while you're working. So, you know, if you like a certain token or whatever, we've got a few back-tested strategies that are locked and loaded. And there's also going to be a back tester that you can play with and work out your own strategies and your timelines and all those things. So it's a super like accelerated course. You can go from knowing nothing about trading to having a basic TA understanding, and then understanding how to incorporate that with some of these advanced indicators that you guys see. And then on top of that, we're banging in some bots for the guys as well. So yeah, absolutely lots crammed in there, but super exciting, man.
Yeah, amazing. Guys, if you are interested, I recommend going to the link in the description below because this is time-based. So the spots are going to run out. They're taking signups right now. If you go through to the link there, it says Dylan's Trading Accelerator School. Click that, jump in. You know, even if you aren't a short-term trader, this is still something that you can learn from. Remember, it's just an extra tool that you put into the toolkit. If you even learn one thing, a lot of the most successful people in the world, you know, read a book a week. And they all say that even if they just take one sentence from that book, it was worthwhile read. It's the same kind of thing when it comes to your knowledge in the courses. Of course, this is partnered as well with Chart Prime, which we know their reputation precedes them. They're amazing. They have some of the best indicators in the world. You know, it's all about creating a trading system. So you can utilize those indicators to develop your trading system and succeed over time. This is what trading's about, right? When I first started to learn trading, I was learning from about 5 or 6 different people. And then over time, you start to create something that works according to your style. You take a little bit from here, a little bit from there, and then you mesh it all together and you have your perfect system, right? So even if you trade like me, even if you like the way I look at things, I still recommend you can learn something from this. So use the link. Yeah. When does it begin? When does the actual like course go live? Oh, there
it's live now. Yeah, the course is ready to go. There's a couple more modules coming in hot for you guys, but you can start the course now. And exactly what Kyle is saying, you know, my trading journey, I picked up information from so many different traders. I built my own system, and exactly what his point is here. You know, even if you take 1 or 2 aspects from this course, it's going to help you guys. It's going to help you accelerate, and it's going to help you understand a couple of things a lot better. So yeah, it's live. You can sign up now. We also have a community that we are busy putting together at the moment that is also ready to go. So we've got our own Discord, and we're bringing in some nice edges. You know, you're going to get my normal TA, you're going to get my normal signals, my normal setups, and then we got all that confluence with the Chart Prime guys. We've got some other indicators in there as well. You're going to see it's not just a Chart Prime indicator Discord as well. We got tons of other things going on there. So yeah, super excited, bro.
Cool, amazing. Yeah, I'm also going to sign up. So yeah, let's sign up, guys. We'll jump in. We'll support you there, Dylan. And yeah, let me continue. Let me just run through a few more things over here, but we'll bring you on again. And I look forward to seeing the success that people get from this.
Catch you later. Thanks, guys. See you. I'll see you there. I'll see you on the course. Okay,
cool.
Later.
Cheers. Bye-bye. All right, guys, let's continue. Let's quickly run through some of the alts. I know that's what you come here for, so let's have a look as quickly as possible just at a few of these. So simply put, Casper, you know, coming into the mid-range over there, that's still in a decent zone. These were some of our high time frame charts just to give you some perspective. there is still a lot of opportunity over here in terms of the fib extensions and the targets that we're looking at. You got NEAR as well, still looking decent over there. We'll pull a bunch of these up in a bit. I wanted to outline, there's a couple of newly launched projects that have just come out, which I'm interested in, which I'm keeping an eye out on. One is 𝗕𝗬𝗓. I did mention to you guys before that 𝗕𝗬𝗓 would be launching. It's literally up 70%. Now 65%, it was up 70% today alone, right? Just came to market. Part of the whole cross-chain narrative, which I think is going to be one of the sectors that's going to run later on in the cycle. You guys know that we've been looking at things like Axelar as well. So 𝗕𝗬𝗓, keep an eye out on this one. Just launched. You can get it if you are interested in the coin. KuCoin, Gate.io, Mexi, Bitmart, PancakeSwap if you're looking to get it via DEX. But so far, looking really, really good. Put on your watch list over there. Another one that I want to mention as well in terms of the gaming sector to look out for, because next year is going to be the FIFA Soccer World Cup, right? So we have Mythical Games, right, today announcing their groundbreaking partnership, or this was a couple of days ago, right, with FIFA Rivals. Ultimately, if you look at the chart as well, it looks pretty decent. We'll pull that up over here in a moment. But in terms of the overall chart, look at that. You can see holding the space over here of support. I think it looks pretty decent, a solid pick to put into the gaming portfolio. Let's quickly go to Myth and just check it out. So here you have it, Myth. This one's on Mexi. Okay, and I want to also talk about a couple more of the gaming coins, which could start to get moving. So if you look at Myth over here, got a clear range low, still relatively low liquidity. You can see the way that it's been trading. Most of the market haven't caught on to this. For those of you who have been here since 2017, 2020 cycle, and 21 cycle, you guys know exactly what gaming is, the potential within the gaming sector, right? The type of moves that you get. So I think keep an eye out on this one. Anything that comes anywhere near this range low at about 17, 18 cents is probably a screaming buy, especially with their partnerships with FIFA. I think it's going to do super well. Another one that I want to mention over here is Prime, right? I told you about Prime. If you look at Prime, high lows, high highs over there, and we can actually pull the trades across over here. Remember that we took this trade. You can see there it is. Prime, we were down for a short while, up now 64% on this leverage trade on our Bybit accounts over there. All trades are up except for Aptos, right? Aptos is the only one that's punishing us a little bit over there with 8.5% down. But also another gaming one that I've been looking at, Vulcan Forge, right? PYR up 83%. So I opened up a couple of these gaming positions just to be hedged and ready for what comes next within the market. Yeah, let's quickly go. Let's go through a couple more of those gaming coins. So that is Prime. Where did our Prime chart go? Okay, Prime, a little bit of TPing, probably coming in just under that 14-cent region, 13.87. Look, I probably won't take any profit over there. I'm just going to continue to hold this. When you get a pinpointed, almost perfect entry, just hold that position, right? Because it's very, very unlikely this is going to come back down to our original entry, especially when you consider Bitcoin dominance and what it's doing, and ETH-BTC and what ETH-BTC is doing, right? So do keep an eye out on that. Okay, let's just cover this one because it's here. It's right in front of us. This is another one from the Easy Algo indicator. If you can see 𝗬𝗎 come back down into the 327 level, remember the way the Easy Algo indicator works is it looks at periods of very, very low volatility where there's a squeeze. And then ultimately using those pivot levels, you can time your entry for the next move. There's a trade setup, entering on that 327 line, stop loss at 325, very tight stop loss over there. And then you're looking to TP at $3.54. So let's have a look at 𝗬𝗎 on my chart. And I just want to bring that up. I'm still long on my 𝗬𝗎 trade, by the way, guys. I'm not going to close that position. We're holding that for the long run. Let's just see if I can find that again. Where did that? Let's go to the top over here. 𝗬𝗎. There it is. Okay, here's the 𝗬𝗎 trade. So similar to what I'm seeing, remember with these moves, you tend to see them move in waves of 5, right? 3 strong up waves, 2 down waves. So it's wave 1, wave 2, strong up wave, which is wave 3, wave 4 down. And now we basically said we're looking at this to hold as a major, major support. And 𝗬𝗎 is probably going to expand into the 5th wave, right? So I'm in alignment with that. If you do want to learn more from Easy Algo, again, all the links are below. For Dylan's school, for Easy Algo, everything is in the description below there. So that is 𝗬𝗎, right? 𝗬𝗎 still looking okay over there on a low time frame. Let's just quickly narrow this down a little bit. Okay, so there it is. You can already see the break of structure. So definitely lines up with what I'm viewing. Lower highs throughout. You've recently, let's clean this up a little bit. You've recently just created that first break of structure, the higher high, right? Clear that level, throw back, create the next high low, and then it's off to the races. That's looking at on the 4-hour time frame. Here's your hourly time frame over here. Still looking decent, right? Probable higher low over here. So if you want a tight invalidation, you can enter right now, put that below there, and you're looking for higher prices. But I do want to at least warn you and remind you, be careful, right? Be careful when you're using leverage in a bull market. It's a surprising thing that happens within the bull markets, right? Many more people get wrecked in a bull market than they do in a bear market. I remember every single cycle, people that go from $1,000 to $50,000 towards the end of the cycle, and before the cycle's over, it's gone. They lose everything, right? And then it's absolute calamity. So if you can, right, you need to have a trading system. A trading system would essentially work like this. Very, very simple. To mention over here, let's say you have your big spot trading portfolio. That is where the majority of your trades happen, right? You might have a smaller swing trading portfolio, which is low leverage, like 2 to 3x longs, and you use less capital in that. So the size of the bubble refers to the size of the capital in the trades. And then you have your super small high leverage positions, which you'd be trading with probably 1/10 or 1/20th of the size of what your spot positions are over there. Now, as this bubble grows bigger and bigger, as you make more and more money on the high leverage trades, and this starts to size up, what you want to do is you want to flush that money out, right? You want to take that money and throw it into the spot positions, convert it into spot trades, throw a little bit of it into your low leverage positions over there, and make this bubble small again, right? Make this bubble small again. It's all about the ratios. I teach this as well in Whale School. You guys are also welcome to join Whale School. It's all about the ratios. Keep it simple, right? Keep it simple. Be safe. Reset your accounts, and you should be A-okay. Okay, quickly looking at Solana over there. Solana is in an interesting spot over here. You know, it's kind of in no man's land. Very difficult to recommend any kind of a trade over here. I think that because in terms of the trend, the obvious invalidation for Solana would actually be, below this region over here. But I won't really give that a 208, because if you drop below 208, you're coming directly into support anyway. That's why I say it's kind of in the middle of no man's land over here. If Bitcoin does bounce, I wouldn't be surprised to see this create a higher low and then rally quickly towards that 262 level. You want to see Solana trade above the all-time highs again, 262, 270, and start to hang around that area, creating a trading range. If it creates a trading range around this region over here, then you have implied targets that should go much higher. Remember, the initial target based on this rectangle over here would have taken price to just shy of $300, right? And you should see this really accelerate as you witness the ETH-BTC chart running towards the upside, for the simple reason that if you measure Solana against Ethereum, Solana is outperforming Ethereum. It's got high highs and high lows, and it's been a clear winner, right? So we'll continue to monitor that. We'll continue to assess if that remains the case. All right, I do want to just remind you as well, if you do go through to my section in Captain's Take, this is the 𝗲𝗲 charts that I dropped yesterday. I'm just sharing a little bit of free alpha from the group with the rest of you guys, as it is Black Friday, which is coming up right now. So 0.00001678, the level has been hit. If you look at the chart of 𝗲𝗲 against ETH, it could come down a little bit more. So ETH might do an initial outperformance in the short term, but then you're looking for the high low to form. That's probably the perfect time to get that exposure into 𝗲𝗲 against ETH, right? 𝗲𝗲 BTC is also looking really, really good, finding support at the 50% level. So all of that has been dropped over there in Whale Room. Do we have time for more? That's the question. Let's just double check these trades. Are there any opportunities over here for you? Zeus is up a lot. Jasmine is up a lot. I guess Aptos is still an opportunity, right? Since I'm down on my position, I would actually like to scale this trade up a bit more, reduce my average entry, and bring it closer to break even. So let's have a look at Aptos. If I had to take a new trade today, I mean, that's it, right? Bang, that's a perfect opportunity on Aptos. You're holding the mid-range over there. You have yesterday's wick as a beautiful invalidation. That was kind of the shakeout candle. And pretty much you wouldn't want to see price come below that level again. So if you did want a trade today, but despite the other ones that I've given you, Aptos to trade it up to 18 is a realistic trade opportunity that you can look at. In terms of risk to reward, it would look something like this, right? So you're entering in over here, give a little bit of leeway to scale in just in case. I'd probably put a hard stop down at about 10.05, and then I'd be trading this to the top side of the trading range. Let's make it nice and bright so you can see everything clearly. All right, there it is. And there it is, right? So that would be the trade setup that I'd be looking at. It's all written on the right-hand side. Leave a little bit of leeway, right? In case it comes down a little bit more so you can enter down towards 11.30 within that region. And then, yeah, that's it. That's it, guys. There is, again, Black Friday. Use the link in the description below if you do want to jump in. I think that's it from me. I'll catch all of you on the next one. Thank you so much for joining. Have a stellar day, everyone. And cheers for now.